Now we can see this is a live example. I am trading live right now. This is a live example. And this is now GBP. This is gold, sorry. This is gold. Now we can see between 2 and 3, the market pushed up. And when the market pushed up, you see this between this and this time, the market has pushed up. Now on reaching this area, we can see the market now pushed below and then showing us that we are going to be into the sell. So what I want to see is I want to, preferably we would love to drop already here and we drop up to at least take profits from here. But also we could come and then take out this high that has been created already. So we could come and take out that high to create a double top. And then that will be the move that will give us. So already I've entered one position here. And then maybe if it comes back up here, I will again re-enter because I will be sure that it's still going to give us sell. So we have already a sell entry here, and our stop loss, our take profit is right down here. But I want us to limit ourselves to 1:3 risk to reward ratio so that we are not so much exposed to market movement. So this will be really good because this is a break and retest. We could have a break and retest here. So I would love to see the market come to this area and take out that. So I want to take 1:3 risk to reward ratio here on gold, and we see what happens. Now the same thing happened on GBP/USD. You can see between 2 and 3. So we have 2 here, and then the market pushed up. Okay. So what we will expect when we see the market pushing up like this, we want to see the market now dropping thereafter. And we can see that now if we go to 1 minute time frame, you can see this this area where the market. Now, why was I interested? Why did I put these 2 lines? You can see these 2 lines are coming from the in history. We have this line as this is a high, and then there's another high here. So we have this and this as high and high. So we expect the market to drop off of those areas. Preferably, I would love it to come to this point. So that's why I am skeptical about trading GBP/USD right now. But really, we want to see selling in this market today. So if this push continues up, we would love to see the market again push up to here, and then create for us a double top, and then we can now drop to this area. So if it comes here, that will be a very, very good point. Or it would come to fill this fair value gap. So this is what I'm waiting for. When I see here, the market comes to this area, and then I see a rejection, I'll go into another a sell on GBP/USD as well. But if it doesn't, then I will wait for it to come to this point. But on gold, I've already entered one position. Okay, I'm already into the gold trade. I'm trading a 6,500 next account. Okay, I'm trading a 6,500 next account. So yeah, I'm trading 6,000 on the next account. I'm going to, don't worry, I'm going to take a screenshot of my entry. I mean, an entry screen recording. I'm going to do that and put it on this video so that we see where I entered exactly. Okay, so that is it. GBP/USD, I'm still waiting. For this area fair value gap fill or to trade up here, because history tells us that there's a potential high here. Okay, potential high here where the market would be interested in. Now, why would this market be? This also could be a potential area because you can see there's a very, very big fair value gap that was left behind here. Okay, when you travel in time, you can see there's that fair value gap which was left behind and has been filled. So could be that's the reason why the market came and then pushed below. It's important. So we want to say, so this is what I wanted before I enter on GBP/USD. Okay. So if this candle closes bearish like this, I am going into the trade. %, Fibonacci retracement. It's a good entry. I'm adding one more position on gold. No, it has already moved down. I would have added when it's up. But since it has moved down again, I'm not adding. Okay, that's GBP. You see that push is very, very beautiful. That's a nice push down. That's what gold is doing. Okay, push up. Okay, that bearish close. Now I have three instruments. I have GBPUSD, XAUUSD, and then US30. I showed US30 during New York session. This strategy also works by the on US30, but I really do not want to buy the US30 because it has low volatility during the London session. So I want to trade it when it's in the New York session. So that's GBPUSD. So if you entered here, this is where we entered from. If you entered here, I just did not enter exactly here. So maybe I could say I missed that move on GBPUSD, but I got one on XAUUSD. So gold is moving. It's $11 so far. Our target is $160, and our stop loss is $82. That's about under 1.5%. Okay, push up. I may add one position on gold and also enter another position on GBPUSD. I'm going to add a small position on GBPUSD. Put an entry on GBPUSD also. So I have two trades running. GPS and USDAT and gold. The push up on gold. Okay, minus 30. Let's see how this trade closes. Okay. Okay, nice push down. Beautiful one. Now this candle closing is going to be very significant. The 5-minute. The same with GBPUSD. The 5-minute candle closure is going to be very, very important. So I am going to stop now for here, and then I'm going to come back in the review so that the video is not very long.
Okay, so this is our trade so far. The one we entered this trade live, and you can see that after the London manipulation, okay, the London Q-zone manipulation, we are now trading selling. So I feel like closing one position on gold because this is a small account. So I want to wait for this market to the first entry to give me $60, and then I will close it, and then I break even. That's what I want. GBPUSD is also moving on well. However, this rejections might scare us out. Rejections are massive. Maybe it could be rejecting that zone. But gold, I want to wait for the market to push below this zone. I want it to push below this area. Once it closes below this zone, then I'm going to close one position and then break even, and that will be the trade for the day. And for GBPUSD, you can see the move is that's good. That's a good breakout. So that's what that's what you want, and I think this is a good one. We are likely to move down. Okay, so this is how far we are. This is how far we are. This is how the system works. It's just very simple. You just need to give it time and then backtest it, and you'll be surprised at the results you're going to receive. So like I said, I want this market to close once gold closes below this point area, then I'm going to close one position, the one I entered earliest, then I'm going to break even the other one, and then that is it, to have a good risk management. So that's already 2% up, more than 2% up, and that's good move on gold. So I'm closing one position with $51, so that's okay. And then I'm breaking even the other one. This I'm moving the stop loss to break even. And for GBPUSD, I think it's okay. So on gold, I'm on a risk-free trade. Gold, I'm on a risk-free trade, and GBPUSD has a risk of about $36. So if I kick out on stop loss for both, I will still be having money in the bank because gold is on risk-free.
Okay, so this is how the trend travels. So gold, remember, we entered the entry here. I'm going to show you, this is where we entered from. We said when 2 pushes high up to 3, when the market closes at 3, we are getting an entry at an entry at 3 after 3. So we got an entry at this point, and the market pushed low up to this point. So let's go to 1 minute time frame and see exactly how we saw the market. So we said on this engulfing candle, exactly where I entered from. After the market engulfing here, I entered and then I put stop loss above there. But then I was skeptical. I said, if the market is going to come up, I'm going to take out this liquidity before we sell. But it did not. So when the market came back and gave us this engulfing candle, I entered the first position and said, if it comes back up here, I will re-enter. The market pushed low and then came back up here and it gave me a re-entry. I entered another trade and then we pushed low. So we can see the market gave us our 1:3 risk to reward ratio very perfectly in a very short time, about 30 minutes. We're already done with it there. Then we picked the money. GBPUSD still, you can see, we said from 2 to 3, we pushed high, and then the market came back, and we had an entry from this position. But I did not enter exactly here. I missed this trade, so I waited for it to come here, and then I re-entered at this point. And then we see we have also collected our 1:3 risk to reward ratio. Trust me, if you go to Euro USD, you're going to see the same thing. If you go to Euro JPY, you're going to find something like that. GBP JPY. If you go to Euro CAD, you go to GBP CAD, GBP CHF, Euro CHF, you're going to get this pattern really performing well. It does very well when you're dealing with euro and pound pairs, and also for instruments like gold. US30 sometimes it does, but I really do not want to stress myself trading US30 during London session. I prefer to trade US30 during New York session because it has a better momentum for us. So this is how the system works. I hope you will love it and you will enjoy it. And also please go and backtest it and find out how you can actually benefit from this. The GBPSD has paid out also. Then gold has also paid out. Actually, this could be another re-entry, but I don't want to re-enter again because, I mean, why would I? Because gold is going to still continue selling and we don't know. Then in London session also, there's a strategy that I'm also going to show you how we trade New York session. This is the London strategy strictly. And then the New York session, it's also almost the same patterns, the same system, but just different sessions. Okay, thank you for staying on. I hope you benefit from this.